Another week in the market, another $964 in pure profits. And I know it sounds too good to be true, but it's not. And I'm going to show you exactly how with these live trades in this video right here. What if I told you that there's a way that you can make money in the stock market without needing your stock to skyrocket? In fact, you can make money with this strategy even if the stock just sits still or even if it dips a little bit. Sounds too good to be true, right? Well, it's not. This is exactly how I make money consistently in the market week after week, and it's by selling options. And today I'm going to break it all down for you so you can see how powerful this strategy really is. All right, so first things first. What does it mean to sell options? Most people only really hear about buying options, chasing that huge win. But here's the truth, guys. Over 70% of options actually expire worthless, which means the people who are consistently making money in the market are the ones that are selling the option, not buying the options. And that's where I play the game. I sell cash secured puts and covered call options on companies that I actually want to own anyway, companies like Amazon and Google. This is exactly how I make consistent income each and every single week in the market. So instead of gambling, I'm collecting income upfront while positioning myself to buy stocks that I already believe in at a discount. Let me show you exactly how this works by showing you two real trades that I just placed for this week. So on Google, I sold 5 put option contracts at the strike price of $235. I collected $1.12 per contract, which means I collected $112 per contract because each options premium you have to multiply times 100 because that option controls 100 shares of that stock. So when you look at the contract, that means that I basically got paid $560 up front just to agree to potentially buy the stock at a discount. And once you subtract the premium that I collected from the actual share price of $235 per share, my true break even on this trade is $233.88. And take a look at where the stock is right now. Google is currently trading above $241. It's almost $8 higher than my current strike price. And every day that goes by that I don't get closer to that strike price, this option is going to continue losing value. So essentially, you don't have to carry it all the way to expiration date. You could get out of it 2 to 3 days before. You could collect 60% of this option contract and get out of it. You do not have to wait to the expiration. And having that flexibility is also another neat thing about this strategy. But the key here, guys, is time decay. That's why I usually do this 1 to 2 weeks out for the most part. The closer the expiration date is, the faster that contract is going to decay in time, as long as the stock price stays above your strike price. Every day that passes, as long as Google stays above my strike price of $235, the option becomes less valuable and I get to keep the premium. Now let's move on over and take a look at Amazon. I also sold 2 contracts at the strike price of $225 on Amazon for an average credit of $2.02. Once again, you got to multiply that times 100. So that means I collected $202 per contract, which gives me another $404 in premium collected instantly, guys. My break even on the stock here is going to be $222.98. And Amazon's current price is currently $227.89. So again, I'm sitting comfortably above my break-even price. As long as Amazon stays above my $225 strike price by the time of expiration, I'm not going to even have to purchase the shares. I'm hoping I do get to purchase the shares because this is a new support level for Amazon. So I'm crossing my fingers and hoping I do get assigned a couple hundred shares. But if I don't, I'm not going to have to buy any of the shares and I get to pocket all the premium. It's a no-brainer. And hopefully if it does dip and it does go below my strike price and I do get assigned, I'm going to buy Amazon at a discount compared to today's share price, which as an option trader / long-term investor, it makes me pretty happy because I get to own shares of Amazon at a discount compared to what they're trading at today. And as a long-term investor, guys, I'm getting paid to purchase these shares at a discount. I don't mind holding these for the long term. I'm going to make money to buy them. And not only am I buying them, making money, I'm getting them at a discount. It's a win-win situation. And this is why I beat this dead horse every single time. This is literally as good as it gets. The only downfall is, and this is, nothing is perfect. It does require a little bit of capital. You do need to have a little bit of capital in your account to sell these calls or cash secured puts on these bigger tech stocks. But once you get your portfolio there, man, you'll never look back. And this is just the simple beauty of selling options. Whether the stock stays flat or it goes up a little bit or it even drops a little bit, I'm still in a position to win. The odds are in your favor when doing this strategy. And before we move on, if you enjoy this type of content, please do me a quick favor. Give this video a big thumbs up and subscribe to the channel. Every single week on this channel, we go over live trades like this one right here. If you enjoy that type of content and you want to learn how to do this yourself, subscribe to the channel and come along for the journey. Without further ado, let's get back into it so you too can learn how to do these trades. So why does this strategy work so well? All right, let me tell you. 2 big reasons. Number 1, time decay. And number 2, probability. Every single day that passes, the options that I sold lose value, and that's because of something called theta, aka time decay. And since most options expire worthless anyway, the house edge is on my side, being the option seller. Combine that with picking strong companies I actually believe in for the long term, and I'm stacking the deck in my favor. If I get assigned, I end up owning great stocks at a discount. And if I don't get assigned, I just pocket the premium and do it again the next week to pocket even more premium week after week. This is a rinse and repeat cycle, guys. You're truly stacking the deck in your favor. And let me give you a tad bit of motivation here, right? This is, I guess you could say, the motivational part about this video. This is not about hitting the lottery within the stock market. This is about consistency. Selling options is like running a business here. You're the insurance company, collecting small, steady paychecks week after week after week. And over time, those consistent gains compound into real wealth. This strategy allows me to build my dividend portfolio, grow my cash flow, and put myself in a position to eventually live off passive income. And the best part about this all is anyone can do this. Anyone, even you. So if you want to turn the odds in your favor, making consistent money each and every single week in the stock market, selling options is pretty much the way to go. And I will continue posting these trades so you can see this in live action. Once again, if you found this video helpful, do me a favor, smash that thumbs up button, subscribe to the channel, and leave me a comment down below if there's anything about this strategy that's confusing you. If you need any clarification with it, I'd be more than happy to jump into the comments with you and further break it down in the comment section. And remember, before I let you go, this is not about timing the market. This is about time in the market with the right strategy. And selling options is one of the most powerful tools to get you there. Thank you guys for watching. I will catch you on the next one. Peace.